a year and a half later and I'm doing another video. So today we're going to be talking about RSIs. I'm going to do another video today as well about stochastics, so hang in there. But today we're talking about the relative strength index. What is it? How do we use it? What do we look out for? And how do we use it to keep ourselves profitable without getting butt-folked by the market? So we're going to go into different levels of RSI that we look out for. What is bullish? What is bearish? What is trappish? We're going to go into how to spot divergences, basically higher price, lower RSI, lower price, higher RSI. And then we're going to go into trending out RSIs so that way we can figure out whether the markets the swing that we're watching has a little bit more dugga in it. So basically, if you stay with me, you'll figure out a little bit about RSI and you might learn a thing or two. So we're going to get into it right now. Before we break down RSI, I do have to give you a little bit of a warning. There are no magic indicators that are going to help you learn how to trade. There is no magic indicator that's going to give you a perfect trade. Learning how to trade takes experience, time, effort, doing it over and over again. It's price action first, and then using your indicators to help see the vision. Whenever you're trying to trade an asset, you should have a little bit of understanding of what that asset's price action might be like, and then you use your indicators to support whatever theory you have. And RSI is one of those indicators that help you gauge the momentum of the swing and whether or not it still has more room. It doesn't help you gauge whether or not you should be taking a position right then and there. So what is the relative strength index? The relative strength index is an indicator that gauges the momentum that your asset has. If an asset is moving bullish, you'll see the RSI move up with it. If an asset is moving bearish, you'll see the RSI move down with it. It also indicates conditions of overbought or oversold. When overbought's happening, too many people are buying it and sellers tend to short the dog shit out of it. Oversold conditions usually mean too many people are selling it, and sooner or later bulls come in and then they push it up. Now, I consider overbought anywhere from 75 to 85 with extreme conditions being 90, and I consider oversold to be anywhere from 30 to 25 with extreme conditions dipping into 18 to 15. Let's look at an example of a clear overbought and oversold condition. This one takes us back to the mid-July. Here you can see the price is going up. We don't break below 69, and then we keep going up on the RSI until we reach 85, and then the next candle we start going down. We reach this 42 region, and then we start yip-yapping. Now, something to look out for is when an RSI hangs out from like the 45 to 65 region, there tends to be the most amount of chop when an RSI is flipping between 65 and 45 region. So you have to look out for that. As you can see right here, here's a little chop region, and well, look at that. We're also chopping in the same area. If everything goes well and the market's doing great, usually we go from overbought. See right here, we went from 83, we went down a little bit, but this is truly bullish because we really didn't break RSI. The price is acting pretty bullish. We hit 69 RSI and we popped back up from it. There's bullish overbought and then there's bearish overbought. This is an example right here of bullish overbought, right? We got overbought, we dipped down, we didn't break down below this midline at all, and we just popped back up again to go to 85. At that point, I would be trying to short it. Right there was the area in which bulls could not drive it up a little bit, and then we started to go down. So around here, you can see we ended up leveling out at 45 RSI. We had a little bounce from there. We couldn't break above 65 RSI, which is now 45 RSI and 65 RSI is something that I consider bearish, fake bullish. If you see the price go down to 45 RSI and just stop and it bounces back up, that could be that, bounce region. But also if it goes up to 65 and it stops, there could be a good inclining that sooner or later you're coming into chop unless you break above or break down. So as you can see here, we were in this chop zone while the RSIs were figuring something out, and then we broke down below this 45. we rushed down to 30, we bounced back up, we couldn't break above 60, and then the RSI started breaking down. We hit truly oversold when we hit below 25 over here, and then we started our next little leg up. Now, in a perfect world, the RSIs would act like that, but in most cases, the RSI will reach overbought, oversold, and then it'll form a div. So you want to be looking for bull divs and bear divs as well. Let me show you a div because it's right up here. After we became oversold, we started pumping. We reached overbought conditions. We pumped up above 75. We went to the same price as last time we were overbought. We started dipping a little bit. We didn't go below that 50 range and we started going up. The price went a little bit higher, but the RSI didn't go higher. What that indicates is that where there was buyers, that true bullish energy was fizzling out. Most of the time, waiting for the RSI to print a bear or a bull or a bear div is the best way to enter a position, because not all the time will it print overbought conditions and then actually dip. So you have to keep in mind when you are watching RSI, you're also looking, if you enter on overbought conditions, you're watching out for a div to be formed. Sometimes it goes up a little bit more and the RSI doesn't go up as high as it did the last time. That is your true entry. Sometimes the price breaks down and we tend to go lower than the last time. And that tells you that around here is the area in which there is energy, but the really aren't showing up as they did around here. You know, this is just the market lapping up liquidity before they send it back up again. And a lot of times, if you wait for that breakdown in the RSI, you know, watch it. It didn't break above, so I would be cautious. Usually 55 to 65 tends to be fake bullish. So the market will tend to do a lot of bull traps at those RSIs, and it'll go down a little bit, find some support around 36 RSI. Now 36 RSI is super important. That's usually the RSI where a bull div gets created. After the price tends to break down for a little bit, you'll find some support around 36 RSI, and then the market tends to go up after that. Lo and behold, we found some support around 36 RSI, and then we went up after that. We're still in this little mid band. Price is going up while the RSI is yip yapping. I think if you were waiting for a good position, you would be waiting for the RSI on the 4-hour to reach overbought conditions above 75, or waiting for it to break down. One of the ways of knowing whether or not your RSI is trapped in a bullish or bearish swing, or whether or not it's going to break out of it, is to literally create trend lines. So one of the things that I do once I've taken a position, let's say I took a position over here, definitely that's a bear div, higher price, lower RSI in relation to the last time we were higher in RSI. So what I would want to do is I want to create a trend line from here and level it out. Now, as long as the price follows this trend, we go up a little bit. Maybe we touch 55, which is usually a trap RSI. We touch 55 a little bit. Maybe we go up a tiny bit more, and then we dump a little bit. What that's indicating is that even though we're going up, there's not much strength in this move. Sooner or later, we might have to break down and retest these 30 to 25 ranges. Usually when the price does something like this, it's indicating that there might be a little bit of a gap soon. So we're not really above 50. We're now under 46. A lot of people will tell you that if you're above 50, you're bullish, and if you're below 50, you're bearish. Not really. It just means the momentum is a little stronger or the momentum is a little weaker. So that's what I think about it like. If we're below 50, the momentum is a little weak, but it doesn't mean we can't rock it up. And if we're above 50, it means we're a little strong, but it doesn't mean that we can't shit down. It really depends on the type of trend we're in. So right now you can see we went close to overbought conditions when we were around 116. The RSI went down. We pushed up. We went a little higher on the price, but the RSI isn't going higher. So whereas the price is going up, the bulls really aren't there to keep it alive. We had a little bit of a pullback on the RSI. We stopped around 40, and now we're yip yapping a little bit. So until we break above this 65 or break below this 45, I would be a little bit cautious. We are definitely trending down, so it feels like the bears have a little bit of a move, and you can do this on any time frame as well. So basically, if you look at the daily, you can create a trend line on the daily, and you can see how we reached overbought conditions around here, and then we dipped down a little bit. The RSI moved up, whereas price was ripping. The RSI wasn't reaching those highs, meaning there wasn't strength behind that move. There wasn't everybody clamoring to throw their money in. So it created a bear div. And right there is the area you would want to short. Did I short it? You bet your fucking sweet ass I shorted it. So from there, you're going to watch, right? If the price cannot break above 60 RSI, 65 RSI, and it keeps whittling down, sooner or later, we might have to go retest these 30 to 25 RSI regions. So it's definitely in the trap area, and this mid band is where a lot of people like to scalp, and a lot of people get butt fucked because they hold positions thinking that they are the best positions instead of waiting for truly overbought or oversold conditions. So one thing I need you guys to remember is that all of these rules do work on any time frame, but the smaller time frames feed into the larger time frames. Meaning if a higher time frame is overbought, then you're going to have to zero in on a smaller time frame to see when those conditions are truly overbought, because you could wake up one morning, see a daily's overbought or oversold, slap a short down, and get butt fucked 9 ways to Sunday, unless you actually go into a smaller time frame like the 9-minute, the 27, or the 3 to see how much more room it has. Like for instance, right? Let's say I was looking to short Bitcoin the last time it hit 124. So what I'm going to do is I'm going to see the fact that, okay, cool, we went up to these overbought regions in July. We went down a little bit. We rushed up. The RSI didn't reach higher, but the price got higher. So in my mind, I'd be like, okay, the RSI is definitely not as high as the last time in price. I'm going to switch down to the 4-hour and see what it looks like. Same thing on the 4-hour. We had a higher RSI, we dipped down a little bit, but now the price is higher without the RSI being there as well. From there, you would switch to the 27-minute. Let me go back to where it's at. Go to the 27-minute and try to find a good area, and then from the 27-minute, you use the 3 and the 9 as well. It's all a laddering down process, and it's all a laddering up process. You'll see how if a higher time frame is overbought / oversold, you do have to wait for lower time frames to get there as well. Here on the 9-minute, right? You can see how on the 9-minute, we reached overbought conditions right here at 122K. We rushed down, price popped up, and we're higher in price with a lower RSI. A bull div or a bear div will show up on most time frames. It's just once we reach overbought / oversold conditions, you really have to go into the smaller time frames to show you the truth. Unless you're trading on a lot lower leverage, it's not going to do you any good just to be like, oh, the daily is overbought, let me short it. No, you're going to have to see the daily is overbought. Look at the 4-hour, look at the 51-minute, the 27, or the 9. It's all a laddering process down and then a laddering process all the way back up. So what I mean by that is, let's say you enter on a short, the RSI boils back down. Now you're watching again for the next time you get overbought on the RSI. If the price goes up and the RSI doesn't keep going up with it and lags out lower than the last time we were there, most likely we're following a trend down. We have to wait till the next time the RSI gets oversold. All right, so let's talk about trends for a little bit. So I like to create trends on the RSI on the daily. You can create trends on any time frame. You just have to understand that whatever time frame you're using, it'll have a multiple. So for instance, if you're charting your RSI on the 3-minute time frame, you're gonna have a lot lower of an amount of time to go from overbought to oversold. If you're charting on the daily, you're gonna have a lot more time to go from overbought to oversold, and you'll hang out in those areas longer. So let's say, for instance, I want to chart the RSI. I'm like, oh, I don't know if we're going to keep going down or up. Now, good thing to do is to wait for some type of bull div or bear div to form. We had the RSI top out over here. The price kept going up until we hit around 110. The price was higher and the RSI was lower at 65. Remember, 65 RSI tends to be the bull trap RSI. So we went to 65 RSI, higher price, lower RSI, and then we started dumping, right? From there, I would want to create some type of trend from the last time we topped out and extend it along. So we have a nice little bull trap right here. We started breaking down on the RSI. We broke the 50 band. We hit that 40 band. We didn't break above that 50 band again, and we dumped down to oversold. From here, you're going to watch to see if you keep that trend. You want to be positioned up here, but then you're watching, right? You're going down, you broke down, you're going up in RSI, you're catching that trend, then you're going down even harder. You catch some gravity around 32, it would have been a good try for a tiny long, but then we hit above that 50 and then we dumped again and going down to near this 35, 36 range. Remember, 36 is that range that's fake bearish. You find a lot of bullish divs around 35 to 36 RSI. From there, we broke the trend and we started going up. And as you can see, we went up, went down, went up, went down, created a bear div, and now we're jostling in this area. From there, I would want to create another trend, boom, and we're going to see if the price can follow it, right? Usually you get overbought, price goes down a tiny bit, you create a bear div, which is right here, and now the price goes up a little bit more, the strength isn't there, we rejected 60 RSI, and now it looks like we're going down. If we break this MA trend, most likely we'll have to go retest around 45, and if we break that, we'll go retest 30. Now, once again, waiting for the higher time frames to get overbought / oversold tend to be the best areas to look for positions. So as of right now, it looks like we are on our way to going to oversold. But if we can catch a little, if we bounce off of this 50 and go back up, we could break this trend. So it helps to have a trend drawn, you know what I mean? So like I would be watching right now, it looks good for the shorters for a little bit, but if we start breaking this trend up on the daily, it probably has room to go and we have another rally up. So hopefully that helps you guys understand a little bit about RSI trends. This is like a little run over on how to go over RSIs, how to read it correctly, look for bullish and bearish divergences, and how to trend it. You're not going to become an expert on RSIs just from watching this video. A part of it's getting the information. The other part is putting it into practice every day while you're trading, and that is daunting. Please realize that if you are learning how to crypto, 10% of learning how to crypto is learning information, and then 90% of it is putting that information to good use over and over again. Kitty, stop fighting. Basically, watch this video multiple times if you need help. Yeah, just watch the market. Keep watching your RSI levels. Look at how they react. Look at different areas in which we pump to and which we dump from. Give it a little trend. Sometimes you can see the forest through the trees. And look out for my next video where I teach you how to add stochastics into the mix to really zero in on good positions. If you are not part of the Biscuit Box, link in the bio, you're more than welcome to join the Discord. It is 100% free. We do daily market signals every fucking day. There is a popping ass VC. We have the best voice chat in crypto. I can say that hands down. A lot of active traders that actually know how to fuck to trade. They actually know what the fuck they're looking at when they look at a chart. It's not just one dude, me, putting everything out and a whole bunch of people in a fucking echo chamber. At the Biscuit Box, all we care about is being profitable without that weird fucking cult energy that these crypto spaces have. We are about at 600 followers on the Discord already, so we're growing. Remember, I do all of this shit for free. It's never paid. You can learn how to trade for free as long as you find the right people. You know, don't pay for a fucking paid Discord or a a course. You're going to get scammed. Everything you need to learn, you can learn just by bringing in the information and then seeing that information get put to fruition over and over again. A lot of the times people have good information, they learn a lot, but they don't have the experience of trading the market. And that's what fucks them up, is the fact that, oh, I have all this information, but you've never really dealt with the emotion or the stress of actually opening a trade. So a lot of the times for a lot of people, it's just trading a little less, putting your feet in the water, you know, getting a feel for it. Once you start understanding these levels, it becomes a whole lot easier. Or if you have any questions, my DMs are always open in the Discord. I will never DM you first. You're more than welcome to hang out on my Twitch streams. I Twitch stream daily. They are also free. I'm very, very active in answering questions in the Twitch stream. So if you have any questions, you're more than welcome to ask me there. And other than that, fuck, man, I don't care if it's 300%, 3,000%, or 30,000%. If you don't take profit, someone's going to take it along the way. Try to learn as much as possible when trading, and also learn from your mistakes, because your mistakes will help you learn more than if you were just winning a whole bunch. Yeah, if you have any questions, feel free to look me up on Discord. If anybody is looking for a no VPN, no KYC exchange, or I do have a promotion on Bitunix, get yourself some deposit bonuses, some free money to trade with if you got it like that. Other than that, I'll see you in the Discord if you guys want to learn how to do this crypto shit a little better. Bye.